Okay. Hello, everybody. Welcome. Thank you, everyone, for joining the webinar. A few housekeeping items before we get started here. This webinar is being recorded and all attendees have been muted. So if you have a question as the conversation goes on, please use the Q&A enabled in the webinar, in the WebEx chat. We're reserving 10 minutes at the end of the conversation to go through as much Q&A as we can. If there are any questions we don't cover, we'll follow up with you via email. So introducing this, we're going to cover the ERCOT E3's power market forecast for ERCOT here. This is the first of a webinar series we're intending to hold on much of our major areas that we do price forecasts in. But I'll note that E3 has been doing market price forecasting for many years, and we cover all major US markets and Canadian markets. So kicking us off here, Jack, I'll do a quick introduction of myself and then pass it over to you. So my name is Grant Freudenthaler. I'm a senior managing consultant here at E3, and I am within our asset valuation practice. So I lead price forecasting efforts for ERCOT here and also North America's only other energy-only market thus far, or still standing, I should say, here in Alberta. I'm based out of the Calgary office here at E3, and some other areas of interest for me are things like commercialization of energy storage, transaction diligence, market design topics, natural gas markets, and many other things we do here. So with that, Jack, why don't I pass it off to you for a quick introduction before we get started?
Yeah, thanks, Grant. I'm Jack Moore. I'm a senior director here at E3. I've been working on energy and power issues for the last 18 years within E3, primarily in forecasting, market design, and transmission planning. And within that, I have worked really sort of throughout North America on that, but I work out of our San Francisco office, but I'm originally from Richmond, Texas, which is outside of Houston. So I especially enjoy getting to work with clients in the ERCOT market, where I get to look at maps of places that I really like and tell my colleagues here about different historical facts about different Texas counties.
Fantastic. Yeah, it's a great resource to have for the ERCOT team with some local expertise. So the agenda today, we'll do a quick introduction to E3, and we'll do a quick overview of the price forecasting practice here at E3 in general. We'll try to get through that quickly and get right into recent market trends. We're going to spend some time talking about summer last year, which was quite an important event here in ERCOT, and also some near-term trends. And then we'll dive right into our 25-plus year price forecast and all the aspects of that that go into it. So Jack, why don't you quickly take us through introducing everyone to E3, the firm, and then I'll jump into the price forecasting methodology here.
Yeah, thanks, Grant. Yeah, we've got over 130 consultants here at E3, over 5 offices, including Denver, which we added this year. We are primarily focused on energy and power sector issues, but within that, we've got a really diverse base of clients. We work on over 300 projects a year that affect some of the projects on this list. Show that it's a large amount of investment is affected by or supported by some of the guidance that we provide. And within those clients, we work for a fairly even mix of state and other non-government, non-corporate agencies, then also utilities and system operators, and then developers and investors in projects. And so this gives us a really sort of broad base to be able to see the industry from all different perspectives and inform what we do, whether it's at a high level policy perspective or investment or diligence on an individual asset. I think within that, we divide our team up into 3 different groups. So 3 different practice areas: the climate pathways and electrification group, integrated system planning and asset valuation and markets. But really all of these three areas, all sort of knowledge developed there and sort of expertise comes together to inform what we put into our market price forecasts.
Yeah, super helpful. I find the client base and also the different practice areas really, when you pull it together, really helps to bring that sort of broad view on price forecasting and the market outlook in general. I'll bring you to this slide here, Jack. Why don't you talk a little bit about sort of the tools we use for modeling and our recent partnership here?
Yeah, so we do all of our market price forecasting now on the Plexus production simulation platform, which lets us do both hourly simulation of the market and how dispatch works, as well as long-term capacity expansion and build out of the market over a long time period. This year, we've announced a partnership with Energy Exemplar, which really helps us collaborate with their team to have sort of take our expertise and our firsthand knowledge of the market and participants within it, together with their skill at developing the software system to represent that in a modeling context. And so we can really work together to push forward what is possible for our clients in terms of creating an accurate representation of and sort of stay up to date on all the different changes that are happening within this system.
Yeah, awesome. We'll be talking lots about hourly and long-term expansion here over the next 50 minutes. So before we dive in, maybe let's give some background on some of the recent work we've been doing here in ERCOT in Texas, firm-wide.
Yeah. So we work really throughout North America, US and Canada together. And within ERCOT, just specifically, we've got a large practice area working with our market price forecast, but also advisory services of digging into questions that sort of come out of what those market prices imply. So that would include the valuation of different resources and projections of revenue for different types of generators and batteries over this period and under different scenarios. Those perspectives also inform what we have for our project development and sort of strategy for different clients and different diligence on particular projects for investors. That's largely in our asset valuation practice area. Separately, in a separate group, so separated off, our integrated system planning group has been supporting within the ERCOT market a lot on recent market design issues, looking at ways to support reliability within the ERCOT system.
Awesome. So I think quickly here, I'll walk us through sort of the six stages we have laid out here of how we do price forecasting here. So as Jack, you've mentioned, we have the different practice areas, the different teams, and that large client base. And so, the joke in forecasting is always that every forecast you make is wrong. The goal is to make it a bit more accurate every time. And so that's something we're hyper focused on as we look at the left side here. It's all about those inputs. It's all about the assumptions. It doesn't matter how fancy the calculator is. Those have to be as robust as possible. So we leverage all those different information sources to develop sort of 4 key inputs, which would be our load forecast, our policy drivers, our transmission and regional breakouts, and also costs here. So real quickly, load forecast, the Climate Pathways group, they do a lot of work on electrification and of things like EVs and buildings. So we really use that intelligence to help augment typically either system operator or other utility level forecasts to really start to build that E3 view of how peak loads and energy will change over time. So that's a key constraint that we put in. Next, policies. So whether it's a carbon price or a renewable portfolio standard or some other decarbonization goal, we look to include that in our long-term expansion to make sure that we're testing what those policies could do to the build. Number 3, we do a zonal level forecast here using Plexos. And so that means that we have on a bulk level the transmission flow. So for example, at ERCOT, we split it into 4 different zones, and we see, obviously with West Texas, which maybe we'll get to, some key constraints in the near term, and so that helps us really model how those zones balance out. Number 4, resource costs. This is something that all groups across E3 were always looking at, declining cost curves on solar, storage, how gas assets are doing, all of that really important for the long-term expansion. We also spend a lot of time thinking about our input markets here. So gas prices and gas price forecasting is something we look at, carbon prices, other commodities that matter, like, you know, in the case of Eastern markets, sometimes oil, things like that. So we take all of these input variables, and as we just mentioned, we throw it into the long-term capacity expansion model. And really this model looks to see, given the load that we give it and the other policy constraints and emissions constraints and transmission constraints, it looks to take all of that cost information and find the least cost way to serve all of these constraints. So this is a really helpful tool in understanding how the build may evolve over time and how different policies impact what the most optimal build is. So once we have the build, we jump into our hour-over-hour production cost simulation. And here is really where, you know, for price forecasting, the rubber hits the road. We're seeing, you know, what gas generators need to be committed, a lot of focus on renewables profiles. So all of that stuff goes into the hour-over-hour forecast, which then becomes a part of our day-ahead final price forecast. There's some details on the next couple slides on how we go from a production cost simulation to our core price forecast, which is a scarcity adjustment. And we also do a lot of work on going from that day-ahead look to a real-time energy and also our ancillary services outlook. So to get into the data here, if you're curious about how we do this more, please put a question into the chat, and hopefully we can get to it at the end. But instead of going into the nitty-gritty here, Jack, why don't we jump into sort of an executive summary of the forecast before we dive in. So ERCOT being one of the most dynamic markets that we cover, real quick, on the right-hand side here, this is one of my favorite charts. This is we call it the evolution of our daily shapes. And so a lot to pick out here. The dotted lines represent historic data. And something that jumps out right at me right away is that we're seeing when the peak pricing in ERCOT is happening, that's shifting. So the last 2 years before 23, we started, you know, we saw about an hour ending 17 peak on average over the year. And it's really the solar story that has really hit the market in 23, which we'll talk about, which pushed that peak hour out into, you know, hour ending 2021, 22. So we're really seeing that as a huge impact near term. Tightening the range of peak pricing, along with lowering midday prices substantially. So we're seeing the contraction there. And then long run, the big piece that we're noticing in our price forecasting is that energy storage is really widening that peak there. So lots of dynamics there. Jack, maybe I'll get you to walk us through the duration curves on the left here and how that sort of renewable story is impacting what prices look like over the course of a year here.
Yeah, Grant, I think overall, yeah, this lower left chart, I think, is a good example of how over time, as sort of you get darker and darker into the blue tones, we're seeing really a greater amount of sort of bifurcation of prices.
Right.
Whereas historically we would have the really majority of hours have combined cycles on the margin and sort of a flat range, sort of a tight range of prices, except for a few hours sort of on the extreme low end and a few hours on the extreme high end. Now there is sort of a mix of more hours with zero or potentially sort of shallowly negative prices, and then more hours that we anticipate sort of long term in sort of a high price range as well. And so that sort of evens out possibly to, you know, somewhere sort of in a similar average range, but
right.
How it plays out over the course of the year really changes, which I think your chart on sort of the different factors that go into that up above really highlights well.
Yeah, quick overview of that one. You know, some macro drivers that is really interesting we're seeing in ERCOT here. We'll talk about gas prices. They've come down quite a bit. And so we're seeing a return to normal over the next decade or two, with then some real gas declines at the end of our forecast. Renewables and storage, we'll talk lots about large investments being made in the ERCOT system in renewables and storage, which we see having downward pressure on price. Coal retirements, a big story as well, that baseload energy and the evolving supply mix, those coal retirements really putting upward pressure on price here. Load growth, a big factor we're going to talk about near the end of the presentation, also driving prices higher. And then ITC, PTC, and different environmental policies. Certainly PTC, we're seeing, solar in ERCOT have a capacity factor high enough now where they're opting to go PTC, which again is impacting that price duration curve and putting downward pressure on price. So hopefully a good overview for everyone as we jump into more content here.
Yeah. Grant, I was just going to add, I know you said earlier that price forecasts, or the trope of them is that they're never accurate, and always evolving. I think within our work, I think that we've added increased sophistication and sort of detail each year that we've made our price forecasts.
Yeah.
And I think, while we still, don't have a crystal ball into the market, I think that what we do have is really a good way of helping our clients be confident that we're considering all of the major factors that go into affecting market prices, and also creating a framework to be able to have someone ask themselves the question, what do you have to believe to have a certain outcome in terms of the prices here?
Yeah.
Sort of a basis for which to sort of have a conversation around those beliefs and sort of how they play out for impact on particular resources or on the market as a whole. Yeah.
Yeah, I think that's absolutely correct. Yeah. And really trying to check all of the different levers and seeing, where they drive price and getting a good understanding of that. Totally critical.
Yeah. Speaking of that crystal ball, let's dive into just the last year. I think it's a good example of that as well.
Yeah. It really does help us understand, the near-term outlook. Getting a good understanding for last year is something I'm always interested in doing when doing price forecasts. So, Jack, what I've got in front of you here is some temperature data. So we've got the average over the entire summer on the left in chronological, and on the right here, I've ranked them in terms of the average temperature in just August alone, the most critical month in ERCOT. So what are you seeing here in the temperature data, and how does that relate to summer last year?
Yeah, I mean, looking over the history, I think two things stand out. One is that definitely there are periods where you have an especially hot summer. It's obviously summer's always hot in Texas, but some are really, substantially more than the average. The other thing is that sort of as of recently, a lot of the years in recent time have been on the hotter end. But sort of within that, sort of looking on the right, I think it really stands out. Just looking at August alone, really, so together with 2011, last year really stood out as somewhat of an outlier compared to sort of all the previous Augusts. And I think there's two things that has an effect on when sort of thinking about forecasting and thinking about the future, which is, on one hand, you want to avoid sort of over anchoring to exactly what happened last year. You don't want to be fighting the last battle, so to speak, all the time. On the other hand, I think when you do have an event like what happened last August, it really does kind of widen the envelope for what you think is a possibility of what could happen within the range of possibilities of outcomes there. And so, that does sort of need to factor into forecasters' thinking in some ways.
Yeah, I really like that, the way you put that. It really does widen the envelope of what's possible. And so when you're preparing a price forecast, you really want to understand what that top end is, what a low end is, and really, what the balance of probabilities is. So something interesting we do with our ERCOT outlook is we'll include a weather year that is close, maybe not quite 2023 levels of outlier, but we do put in a extreme weather year every couple of years to test that, to really understand what that range is. So
Yeah.
fascinating.
And
I'm
the
going to
question
take
is
you
just
now
sort of how
into,
frequently that'll happen. Yeah. Yeah. I was back in Texas, yeah, during sort of mid-August last year, and definitely could feel that was, even for me, it was an extreme heat.
okay,
Which,
anecdotally, you can confirm the data then, Jack.
yeah, exactly. That's not just, numbers, being wrong there. Um, you just switched over to this, which I think is really interesting to see sort of what effect does that have on the power system. On your left chart, it's helpful to be able to see what effect that has both on gross uh, load, which is sort of the light gray area, or the top of the light gray
Yeah.
area, on sort of an average August day. So if you average all the August days together, what you get, um, which is notable. But then it sort of gets hotter in the late afternoon, early evening. But also there's a pretty large contribution from solar during midday, and then especially at nighttime, but to a moderate extent during the daytime, the wind output. These sort of create a pretty decent sized delta between the light gray and the dark gray area, which is the effect to get down to the net load profile, so net of the wind and solar output. Um, and that definitely moderates the peak of what dispatchable generation is needed for within last August on average. What's notable, though, really, I think, especially if you look on the right chart, is the effect that it had on the prices overall, in that not every day within this period of August was the same. And
Right.
so, especially, solar was pretty consistent, pretty consistent low cloud cover, moderate cloud cover over most of the state. But in this period, the wind was variable on certain days. And so, particularly in sort of a late afternoon, early evening time, which isn't sort of the windiest time of day, but after solar has really started to drop off, there's some days when wind is already going at a pretty moderate level, and that really kicked down how much dispatchable generation was needed in that time period, and sort of kept prices high, but not tremendously high. Whereas sort of on a couple of days that were different, ones sort of right in the middle of this 14-day period, and then two sort of on the edges, you see there's sort of lower than average or lower than typical wind on those particular days. And that's especially when prices really shot up to the multiple thousands of dollars.
Right. Yeah. Pretty amazing, actually, when you zoom out and look that over the 2 week period there, with peak loads records being smashed every day, that sort of wind solar handoff that you were talking about just at the evening there really did materialize in the majority of days, with only a couple where it got a bit tighter on a net load basis.
Yeah.
Something that I'm certainly watching is, again, from that chart on the left, that it's really a 2 hour window of those peak hours, and we're seeing that energy storage is mostly interested in a 1 or 2 hour duration configuration. And we've had so much investment in storage this year that I'll be curious to see how that plays out over the summer in that wind solar handoff time frame there. So that'll be very interesting to watch.
Yeah, I know we were talking about, what are expectations for the rest of this upcoming summer. We're already, nearly at July 4th, so you think we're halfway through, but really sort of the heart of the summer from a power standpoint is only just getting ramped up. So yeah, I want you to show what you had seen in terms of forwards, to be able to show sort of expectations of that.
Yeah. I'm a big fan of forwards and the forward market. I think there's a lot of intelligence there. So I'm always curious to see how they're pricing it. So what I've got for you here, Jack, is I pulled the forward from last year before August. So the market at the time clearly didn't know, and whoever knows that they're going to run into an outlier weather event. But it looks like we had a pretty big miss from the forward market last year. And then I've pulled in the thicker dotted line there where the forwards are lining up today. So we're seeing about $130 priced in compared to the $250 we saw last year, but much higher than what the forwards were pricing in last year before summer, which was sub 100. So pretty interesting movements in the forward market there. Could also be impacted by very low gas prices this year compared to last year. We saw a really competitive settle in February here to start the year, but we saw it get a little bit tighter in May. So maybe walk us through some of the psychology and some of the data here in those forwards.
Yeah, I mean, I think some of it comes back to sort of like what we're saying in the sense of people should know that odds are it probably won't be as hot this August as it was last
Right.
August. But the range of possibilities is sort of wider than people were anticipating when they were sitting here in late June of last year. So I think that factors in on the weather side. I think the other side that's I think interesting to think about is what happens on the resource side. So I think May definitely did highlight that depending on the number of outages and depending on what the wind and solar is doing on a given day, resources can make things tighter than you sort of otherwise would anticipate it being. That said, looking at generation changes sort of over time and just the build, relative to last year, we've got more resources online, particularly as you mentioned that large amount of storage on the system now, as well as solar to sort of charge it up during the middle of the day, which is sort of a material change. I think one thing that people are still sort of wondering is sort of to what extent is the underlying load changing, sort of controlling for weather, which I think, in ERCOT's forecast, it's not a perfect comparison comparing the Mora report, which is their outlook now, versus Asara from last year. That's relatively flat, although I know, there's a lot of new large load going in.
Right.
So the possibility at sort of the very, very upper end still remains pretty high.
Yeah, it's really interesting seeing that, it really does take the 100th percentile case here to see a peak load increase. So it really does speak to how hot the weather was last summer and just how much cooling load. I mean, it was maxed out, absolutely. I think it's really interesting too when we think about the forwards, like you mentioned, that envelope. It adds this risk premium into the market that participants will have to sort of manage, because that distribution of prices, if we get two weeks of hot weather, how long can the wind hold up, like we mentioned, where if that handoff doesn't happen perfectly, how many days of that, how many times do we go to the price cap? Really interesting. So that catches us up here, Jack, on sort of what happened last year and sort of the outlook for this summer. Next year, I'm going to take us into now, we're going to start thinking more long-term, because this is a long-term price forecast. So we got to cover not just next year, but the next 20 to 25 years. So I'm going to walk us through some of the market design changes that we're seeing, and then we can talk about how that might impact the market here. So lots has been going on in ERCOT, as everyone knows. We had the ERCOT Contingency Reserve Service come in last year, ECRS. So we'll talk about our AS outlook. We saw the floor of the ORDC increase last year as well. And as a part of the Senate bill and the House bills here in response to Winter Storm Uri in 2021, we've seen a bunch of reliability and reserve packages come through, namely in DRRS as a product that maybe we'll get some clarity on at the end of the year. And then we're really this focus on dispatchability with the renewable firming requirement, the performance credit mechanism, and the loan program, which saw a lot of interest at the end of the year. So here's the overview, Jack. I'm going to take you to the ancillary services outlook here, and I'll get you to...
I just wanted to say, going back, I just wanted to make one comment.
Oh, sure.
I think the first three of these really sort of affected things from an operational standpoint.
Right.
And sort of how the market runs, whether there's a 4-hour reserve requirement, for instance, with DRS, could affect how operations work. But in turn, the effect on operations has an effect on market prices. And so, future investment signals. The latter ones are much more targeted towards sort of directly affecting investment signals overall through sort of impacting the resource build, especially the PCM and the Texas Energy Fund, which I think we can get to.
Yeah.
Go ahead. On AS.
Makes sense, that breakout. The first three really being, price formation and, maybe with DRS, potentially a day ahead signal to get the right amount of units committed. So operational there. And then the long-term investment signal for dispatchability, really the focus of the last three. Let's focus on the AS market first here, Jack. We'll go AS and then long-term build, and then we'll dive into load at the end here. So we won't miss that. But take us through the AS market. How is ECRS and potentially DRS going to impact this market here?
Yeah, I mean, the first thing that we always like to point out to clients, Grant, which is important to be mindful of, is the majority of AS products in ERCOT are what I would call upward AS products, meaning that it's reserving headroom on a particular resource that's available, but not actually being used to generate energy in a particular hour, unless deployed to provide that type of AS. And so what that means in a lot of ways is that the prices, and so then the overall dollars that get paid out for these AS products are really heavily correlated with market prices overall, and have to do, because ultimately, with energy market prices, I should say, because ultimately it's sort of the opportunity cost of those asset owners in not selling energy to be able to maintain that headroom that allows them to provide this AS. Now, a couple of things I think sort of have changed and are continuing to evolve within ERCOT on that. I mean, first of all, I think just the massive increase in the amount of batteries that are on the ERCOT system definitely allow for and create more resources that during hours that are relatively low opportunity cost hours, meaning not high energy price hours, those batteries can provide a lot of that flexibility and sort of have room to provide it on sort of short notice that when the system needs it. But I think looking further out and looking at the new market products, I think there's two major questions that we have been really working through, I think, and dig into in our forecasts, because AS is a really important part of our overall evolution here. I think one is, to what extent is DRS going to be additive to the overall AS stack? So meaning, is it an increase in sort of the total quantity of AS that ERCOT will be holding on an individual hour or on a given day for sort of holding to be able to have available when they need it? I think that's the first thing. And it's sort of right now, it could go either way, where it could either be sort of a recharacterization of some of the existing stack of resources like non-spinning reserves, or alternatively, it could be somewhat additive. ECRS actually, historically, it was originally looked at as sort of a recharacterization of some of the of non-spin, and then ended up the totals being sort of an additive look there. I think the other question within this, that's one that's evolving, that we won't know for a few more years, is really how does deployment affect this? So particularly sort of energy, real-time energy and AS co-optimization, which ERCOT still is working on to deploy in the next few years, could potentially make more resources that are available in that are set up for AS, make them also available for energy in hours when prices are really high, and so let it be a little bit more double duty in that way.
Yeah, really interesting. Something I want to key in on that you mentioned is that right now, we're starting to see the large build out in energy storage impact the AS market. It hasn't quite done it yet, but I like typically all these up products, as you mentioned, have sort of an opportunity cost of typically a marginal gas unit in them.
Yeah.
And so something we focus a lot on, as you mentioned, is that, forecasting the AS market going forward, we use historic relationships between energy and AS on a heat rate basis, just because that has such a tight relationship. But then what we do is we adjust for what we call saturation here at E3, where we really look at how big is the energy storage market compared to the AS market, with exactly as you mentioned, if you're not going to be cycling anyway during the day, you can very cheaply provide reserves as an energy storage device. And so what we're seeing is that it really is, midday when solar's high and prices aren't very high. We're seeing AS settle, very competitively, close to zero. But really, it's that story of the scarcity, pulling a battery out and what's its opportunity cost for energy. And so that really starts to set what the AS price is what we're seeing in the price forecast. And the other thing to note too is that while we don't know how the different products may shake out over the next couple of years, we do grow the size of the AS market relative to renewables and load here. So we do a lot of work on that. So
Yeah.
That's what we're trying to capture, that uncertainty.
One thing, Grant, I was curious about, I know, a long time back, 3 or 4 years, I know a lot of folks would just sort of project AS prices as sort of a continuation of the previous year. And I think then more recently, I feel like I hear kind of rumblings of sort of, with so many batteries on the system, they're all headed to zero, and it's surprising they're not zero yet. I'm curious at sort of how you've thought about it in terms of sort of the rate of saturation that's happening on the system now. How fast it'll come.
In the long run, we do see energy storage being a big part of the ERCOT mix. And so that does sort of split the historic relationship we've seen between energy and AS, where we're seeing decouple and, move closer to zero with all of those energy storage devices. So yeah, it's we're certainly anticipating that, and it really is all about that price formation during those peak events. We still do see AS prices moving during scarcity events, but the question is how much and what the split is. And it's enough for, it does make sense to be in AS during those events, but also depending on your strategy as a battery, you may also see it more lucrative to cycle. So it's sort of that midpoint equilibrium we're seeing. Awesome. So let's briefly touch on the reliability package here. So Jack, we talked about the firming requirement, PCM, and the loan here. What's the impact on the market here long term from the reliability package? Moving from a free entry equilibrium type reserve margin to maybe closer to a 1 in 10 type idea.
Yeah, I think the first thing to mention is that the final design of this package and what is chosen to be taken up or not is still definitely under consideration. So it's not clear what the final outcome of that will be. But directionally speaking, I think this is sort of a movement from being energy only, meaning sort of all revenue coming from the energy only and AS market to fund generation build, to having at least some sort of stabilization mechanism to, particularly in a year when that revenue is relatively low, still provide some incentive for investment choice to be on the system during years where the outlook for reliability given resource builds and load growth look relatively low. And so as a result, that, directionally speaking, and I think, I'm curious how this plays out in our forecast, but directionally speaking, that probably shifts to having a larger mix of dispatchable resources or more firm resources on the system overall in terms of the build out, sort of relative to the lack of this, which I think would probably moderate the upper end of prices more than otherwise would be.
Yeah, let me swap us to, we got a chart of our some of the additions in the near term, but I think long run, we mentioned at the top, part of the long-term expansion work we do here is setting that reserve margin as a part of it. And so certainly we saw our long-term expansion continue to build dispatchable generation to meet those needs. And so certainly consistent with the package that ERCOT will need an increase in dispatchable generation from here to help manage the system. So we're certainly aligned in the need for dispatchability going forward, whether it be battery or thermals. We see large investments in both in the long-term expansion. So, that's really the long-term build story for us. We're seeing as you can see in the chart here, a lot of solar in the near term, a lot of energy storage like we've been seeing in the market. Those really grow into the 2040s, 2050s, especially with the PTC and ITC available. We also see a very large build of wind as well in the back half. You've got some of the best wind resources across the country and across North America in Texas. So we're still seeing really competitive opportunities there.
Yeah. Now, the wild card here, I think, is the load side, really, right?
Yes. Yeah. So let's jump into that. Make sure we capture that with the remaining time here. So yeah, the load side. Jack, what we're seeing is, I've got a laundry list here of all the things that could locate here in ERCOT, being data centers, hydrogen production, oil and gas electrification. That's a big upside in West Texas there. Crypto mining, we're seeing interest still. Manufacturing onshoring, which is a really interesting trend that's going on. Electric vehicles, many items here. So maybe walk us through, why is ERCOT one of the best places to locate all of these different types of loads, and how will the system get generation on to meet it?
Yeah, I mean, I think that ERCOT has performed well, and Texas has performed well as the place just where it's feasible to construct something relatively quickly. Whether that's a manufacturing plant for chips or something else, or LNG terminal, or a data center. And so I think that the combination of sort of the space and real estate, as well as the ability to really make changes quickly and put things on fast, I think makes ERCOT an attractive market for lots of different businesses overall.
Right.
On the data center area in particular, this is really an area where E3 experts have been really starting to dig in more deeply, just based on all sort of inbound questions that we've got on that. And we've got a white paper coming out on that relatively soon. But I think a couple of things I wanted to highlight. One is that the load profile definitely is relatively high for most data centers during that sort of early evening hours. That's the time, at least when a lot of people who are using the internet get home and pull out their phones or sit down at their laptops. So it tends to be a pretty high area of time of day of use for that. So that definitely does create sort of more contribution to that sort of peak hour need in the ERCOT system. But I think the other thing is that the envelope of sort of just the width of how big or how small that will go is really wide, I think, in ERCOT.
Yeah.
Sort of how quickly it will go. Probably the upper end expectations of 50 gigawatts is probably both would be very challenging to meet. I think to build out 50 gigawatt, add resources to serve 50 gigawatts of more peak load in 5 years. And I think probably also even just looking at manufacturing capabilities of chips that go into building data centers, unless everything is going into the state of Texas, which it probably isn't globally, it's difficult to get sort of that high. But on the other end, even if it's far less than that, it's still a lot. And so I think, I think in our forecast, this load growth and, again, just sort of the attractiveness of Texas as a state for, all kind of economic activity, continues to be sort of a push and a nudge towards, keeping the market tight and keeping sort of impetus on building up more resources.
So you're saying that an almost doubling of peak load in 5 years, maybe we won't get there, but certainly prepare for load growth. We're going to see a diversification of the load profile here, certainly with whatever does complete. Maybe let's talk about, the interconnection. ERCOT has been outperforming in terms of speed of getting new resources and loads here. To my knowledge, it's the only place that runs this large load queue, where they're doing interconnection studies for these loads and treating them kind of like generators here. It seems to be that, again, the speed in which they've been able to bring on all of these new resources and potentially loads is the fastest amongst in the country. Maybe can we chat a bit about how they're doing that and sort of what's facilitating that speed?
Yeah, I mean, I think it's definitely, true, and looking at the growth of resources over time, that's been playing out. Although also, there's other markets with significant growth in
Right.
terms of resource build recently too. But I think, on one side, just the fundamentals of sort of outside of the power sector of, availability of land and sort of space, and lots of sort of private locations available to be able to put things in, I think is one contributing factor. But I think also on the policy side and on the implementation side by ERCOT's team, I
Right.
think the ability to do things like have a concierge for, walking generators through the interconnection queue, and then just maintaining a fast pace of sort of a up and down quick answer about what would be needed to be able to interconnect a source, I think is an important one. Finally, ERCOT bypasses some of the sort of typical cost allocation questions that can create sort of a loop of sort of slowing some interconnections down in some markets.
Interesting.
Yeah.
Yeah, we E3 hosted a panel in which we heard a lot from developers saying that things like that concierge service and other policies to move that through have been really helpful. One last thing I'll note here before we jump into the overview of the whole forecast here, Jack, is that we do run scenarios for ERCOT, and certainly high growth with much higher low growth is a scenario we've tested, and it really does stress the pace of the build that needs to happen near term, and really puts those transmission limits to the test. It is interesting to see, though, do those loads mostly locate in West Texas, where we're currently constrained, which could alleviate it, or are they all coastal? So it's really going to depend on the location, as you talked about, and such a diversity. It makes it ripe for using scenarios there.
Yeah, absolutely.
We got 3 minutes. Let me take us to the overview, the broad overview. So in the last 47 minutes, we've walked through so much here. And I know it's always interesting when we look at these annual average charts to kind of say, hey, it's just a bunch of flat lines. Did you guys do any work over there? But hopefully we've made it clear that, the annual averages tell a story, but in ERCOT here, we're seeing tons of volatility and changing resource mix, changing policy, changing load profiles, everything around it. So maybe walk us through sort of the story here, Jack, on putting it all together.
Yeah, I mean, I think you've got this in nominal dollars, Grant. So, part of the upward trend is factored into that. It's, on average rising, but that's sort of, I think, one of the charts with the different arrows of factors that you showed, I think really highlights that that's sort of a combination of a lot of different factors working together. I think in that near term, continue to build out the wind will probably continue to keep West Texas prices relatively low, a really large growth and new transmission in the area. And then I think as well, we'll continue to see sort of periodic, particularly high years, or some blip years, which you have with these gray lines, which are those years that we factor in with sort of extreme weather conditions that push things up. Looking out more widely, sort of past that sort of 2020s range into the back half of the 30s and into the 40s, I think, continued load growth, I think, coupled with continued build out of resources that are supported by ITZs and PTCs, I think do sort of push prices up more, not in all hours. Again, like we showed with the duration curve, but definitely some hours have high prices. And then, the major variable there will be sort of how well does the resource build keep pace with that load growth? And then also how much support is there for making sure sort of an abundance of dispatchable resources available to,
Something following on that theme, Jack, is that, we have coal retirements, all coal gone by, I believe it's 24 in the 2040s. And something I find really interesting is we look at our, late 2030s extreme weather year compared to the early 2040s one, even that last chunk of a couple gigs of dispatchable really creates more risk on the system, where if that's not met with equal amounts of dispatchable generation, you really do see the extreme weather year push the annual average a bit higher. So it really shows you how dynamic the system is in terms of renewables and dispatchability mix. I'll bring us back and we'll end on this slide here, Jack, of really trying to get to that volatility story amongst those relatively flat curves. So maybe one last time here, let's walk through sort of how we map the full story back onto those annual average curves here.
Yeah, I mean, I think, it's interesting that this comes out to be on average about the same for most of these lines, or, slightly rising, but not really all that much. But I think the things that I really like that you noted were both how, more recently the peak, a daily shape has gotten later and sort of sharper. But as more and more batteries are added to the system, probably we'll have sort of plateau more in the evening, early evening time period than we had before. I think also the other thing really of note is, an increased number of hours with relatively low or zero prices, where, sort of the possibility to catch some high priced hours make it economic to be able to put in a resource, even if you're going to get zero for some other times a day.
Right. Yeah, it really just shows that flexibility piece is so important near the end there. Can you cycle quickly? If you're running base load through it, how well can you hedge? How well can you ride through those low prices? How available can you be for the scarcity events?
And in that, real long-term look, like a 2050 range, I think one other question that sort of comes in with that is, to what extent will, there be a decent supply of dispatchable loads?
Right.
A lot of load, particularly, some large loads might be, theoretically dispatchable, and it's just sort of a question of at what price.
And to what extent are these large loads that are coming in, will they build in the ability to be dispatchable? What type of industry are they in? Some would be more amenable to it than others. So
yeah, exactly.
Yeah, interesting. That takes us pretty much to the end here, Jack. We've come to the end pretty much on time, which is great. We've got time for some questions here. So I'll pull up some and we can walk through them for the remaining 7 minutes.
Yeah.
And first, I want to thank everyone for joining and asking questions and being a part of the ERCOT conversation. So the first one.
Questions up.
Go ahead.
You want me to go ahead? The first one is, does E3 provide nodal forecasts? And how do we think about or model those? Do you want to get that?
Yeah, sure. So yes, we do offer nodal price forecasts for ERCOT and all the other markets we cover. The Plexos model that we run is zonal. And to complete nodal forecasts, we offer a range of solutions here. We do, we look at things like historic basis, or we'll put together an outlook on, how loads and generation are changing within a specific region and how that might impact the basis profile. And for those who are very keen, we even will go and do a nodal production forecast where we bring in that low layer of transmission through it. So a range of solutions that we offer on that, because when developers and different projects are siting, that nodal piece really matters. So we put a lot of work in supporting clients on the nodal level as well.
Yeah, thanks. The next question we had was, what offerings do we have in terms of scenarios or different times of cases for the market?
Yeah, I mentioned that we'd love to run scenarios here at ERCOT, given the big variables of does load growth outpace generation build? How does that impact price? Do we see a large renewables and energy storage rush that outpaces load growth? So we run two separate scenarios from our base case here. We run a high growth case, which does test that very high load growth world where we're seeing constraints on the system in terms of meeting it on time. And then we also run a accelerated renewables case where we keep seeing $20 levelized cost West Texas wind and solar that just keeps building and building and building, and really sort of impacting annual average prices pretty dramatically. So we run both of those cases.
Yeah. And that's off the shelf. I think the other thing that I've
Right.
enjoyed being able to do at times is, for clients who are keen for it, who are interested in a particular type of question or some other sort of nuance of it, potentially running additional scenarios that customize this,
Right.
yeah, for their particular
Yeah,
needs.
that's a good point. Yeah, we create those two high growth and accelerated renewables cases off the shelf. So those are available and are the same. That's our view on the up and down side. But yeah, certainly can also open up our model and do custom scenarios as well. We do see that quite a bit.
Okay. I think others, just throwing on this, do we offer storage revenue forecasts? We definitely do that. We have some sort of generic off-the-shelf revenue forecasts, and then also for particular projects, we can make forecasts that factor in, all the specifics of someone's particular storage resource or really other type of resource on the ERCOT system, including the factors of their nodal locations, cycling limits, and other factors built in. I think, within that, we've been able to work with the clients and really think through different types of risk issues that I think have made our forecasts of revenue for storage really bankable with a wide range of investors within the ERCOT market.
Yeah, it's a big area of focus for me, and certainly always interesting working with clients and marrying our battery storage optimization model to the price curves that we get, and understanding how AS revenues shift between energy long run. Yeah, we do an energy only and a co-optimized with AS as well, which is really interesting to see.
Yeah. I think the last question sort of all is around the sort of the zonal area. So actually, if you go back to your prior forecast, it might be helpful.
Yeah.
So, not thinking about sort of individual nodes on the system, but rather how the zones within ERCOT, the west, north, south, and Houston areas sort of differ from each other. I think this is definitely something that we represent within our model. We've got sort of existing transmission limits. Over time, we expand certain paths based on some expectation of growth there, and continuing to monitor discussions of particular plans for expansion. I think overall, in terms of the picture, we do see continued sort of lower average prices in that western zone of ERCOT, particularly in the near term. Might moderate a little bit over time for two reasons. One being the possibility of additional transmission that would go out to West Texas, as well as sort of how the market responds. So over the long term, either, if transmission remains pretty limited, then you could see sort of a shift of more development actually coming to fruition in terms of generation and in the north zone, or somewhere to the east of the West X constraint. Or alternatively, the advent of sort of that makes the western zone more attractive to loads, both the stuff that's sort of very West Texas specific, like electrified oil and gas development, as well as data centers and other things that are not sort of dependent on being on the coast. I think, within that, I think, I would say, ERCOT has historically, been pretty proactive in terms of building out transmission. But I think, part of the question, I think, as well, really gets down to sort of a subzonal level, which is you can have areas, different areas in the West are definitely not all equal. I think similarly, particularly in the North Zone, there can be some areas that are sort of the western part of the North Zone or the northern part of the North Zone that have prices that look a little bit more like the West. So we always, definitely
Jack, we've hit time here.
Yeah.
So I want to thank everyone for joining us. We'll follow up on any Q&A we didn't get to separately. I hope everyone enjoyed the session here, and we look forward to offering our next price forecast in the near future here.
Yeah, thank you all, and yeah, look forward to seeing you on forecasts for other areas.
Okay, thanks so much, everyone.
Thank you.